Welcome back to our art investment series. Today, we're diving into Chapter 12, Art as a Long-Term Investment. By now, you've learned a lot about art as an asset, how to navigate the art market, and the various ways to diversify your portfolio. But when it comes to art, it's important to understand that it's not a quick-win investment. It's a long-term play. In this chapter, we're going to explore why art is such a strong long-term investment and how to approach it with a mindset that goes beyond short-term financial goals. We'll also look at the factors that contribute to the long-term value of art, how to build a strategic collection, and what you need to keep in mind as an investor who is thinking about the future. Art is not just about buying beautiful objects. It's about buying assets that have the potential to appreciate over time, sometimes dramatically. Let's explore why art should be viewed as a long-term investment and how you can make the most of it. When it comes to investing in art, one of the first things you need to recognize is that art is not a short-term investment. Unlike stocks or bonds that can provide liquidity and returns in the short term, art requires patience. The true value of art usually reveals itself over time. At first glance, it might be tempting to treat art as just another speculative asset. Many might think that by buying a well-known artist's work, they can flip it for a profit quickly. While that can happen, it is the exception rather than the rule. The art market is often driven by long-term cultural and economic trends, not daily fluctuations in price. Historically, art has been a stable investment when looked at over a long horizon. For example, works by artists like Pablo Picasso, Vincent van Gogh, and Andy Warhol have seen massive increases in value over decades. While the price of any individual piece may dip or fluctuate in the short term due to market conditions or trends, over the long term, the value of high-quality art tends to appreciate. In fact, many of the top art investments have doubled, tripled, or even quadrupled in value over the years. The value of art is influenced by long-term cultural significance, reputation, and historical importance. These factors don't change overnight, but they can lead to sustained appreciation in the value of a piece over several years or decades. One of the key benefits of investing in art as a long-term strategy is its ability to act as a store of value. Unlike traditional financial assets, art doesn't lose value as quickly in times of market volatility. In fact, it's often counter-cyclical to traditional financial markets, meaning that art can provide protection when other investments are underperforming. When financial markets experience economic downturns, art often performs better than other asset classes. This is because art is a tangible asset, and like real estate, it is often considered a safe haven during times of financial instability. For example, during the 2008 financial crisis, many high-end artworks continued to see steady appreciation, while traditional investments like stocks and bonds plummeted in value. Unlike stocks or bonds, the intrinsic value of art isn't tied to market fluctuations or the price of commodities. Instead, it's linked to factors like the artist's reputation, the rarity of the piece, and the demand from collectors and investors. This makes art a relatively safe investment compared to other financial assets during times of uncertainty. Furthermore, art is not subject to the same level of inflation risk as currency-based assets. While inflation can erode the value of paper money and traditional assets, art is considered a hard asset, and its value tends to appreciate over time, often outpacing inflation. This makes it an attractive option for investors who are looking to preserve wealth and protect against inflation. The next factor to consider when thinking about art as a long-term investment is how artist reputation affects value. Over time, an artist's legacy often grows, and their works increase in value as they gain recognition and prominence in the art world. If you purchase art by an emerging artist early on in their career, the long-term potential for value appreciation can be significant, especially if the artist goes on to become iconic. Take, for example, Andy Warhol. In the 1960s, his works were relatively unknown outside of art circles, and prices were low. Over time, as Warhol's work became more recognized and appreciated, his prices skyrocketed. Some of his works now fetch tens of millions of dollars at auction. A key part of building a successful art collection as a long-term investment is understanding which emerging artists have the potential to become well-known. However, predicting which artists will achieve this kind of recognition is a skill that requires knowledge, experience, and an understanding of current art trends. Investing in an artist at the beginning of their career can offer significant returns, but it also involves a level of risk. Not every artist will go on to achieve lasting success, and some may fade into obscurity. As an art investor, it's important to research and stay informed about the emerging artists whose work is gaining traction in the market. Another important aspect of long-term art investment is the quality and uniqueness of the artwork itself. While the artist's reputation plays a significant role in determining the value of a piece, the inherent qualities of the artwork, its condition, rarity, and historical context are just as important. A well-maintained piece of art with historical significance will always command higher prices than a lesser quality work, regardless of the artist. In addition, provenance, or the history of ownership, can significantly influence the value of a work. Art with a well-documented provenance, particularly pieces that have been owned by famous collectors or featured in major exhibitions, is generally worth more than similar works without an established history. This makes collecting art not just an investment in a single work, but an investment in the story behind the artwork. Art that has been part of important exhibitions or has been owned by well-known collectors can see a significant increase in value over time, especially if that piece is later sold at auction. Provenance adds an additional layer of value to an artwork and should be considered when selecting art for investment. As a long-term investor in art, it's important to have a strategy that allows you to hold onto your pieces for many years. This requires patience and the understanding that art investment is a marathon, not a sprint. As mentioned, art doesn't typically generate returns in the short term. The value of a piece may not increase significantly for many years, but over time, the potential for growth is substantial. Part of this long-term strategy also involves monitoring market trends. Just like other investments, the art market has cycles. Certain art movements or specific artists may go in and out of fashion. While it's important to focus on the long-term potential of an artwork, staying informed about the art market and understanding shifts in demand will help you make informed decisions about your collection. Some investors may choose to sell a piece of art early if market conditions are favorable, but a truly long-term investment strategy would likely involve holding the art for decades. If you buy the right pieces from the right artists, your investment in art could significantly appreciate in value, providing financial security and wealth generation over time. One of the biggest questions that long-term art investors face is whether to buy physical art or to consider alternative art investment models, such as art funds or art-backed loans. Art funds are pooled investments in a portfolio of artwork, typically managed by a team of professionals. These funds aim to generate returns by buying and selling art in the secondary market. They allow investors to access the art market without directly purchasing physical works. However, these funds are typically targeted at high net worth individuals due to their high entry barriers. Another option is art-backed loans, where you can use your art collection as collateral for loans. This allows you to leverage your art to generate liquidity without selling it, although the loans often come with high interest rates and require that the value of the art is appraised. For most individual investors, buying and holding physical art remains the best approach for long-term growth. By purchasing artworks directly and holding onto them for years, you allow them to appreciate and build personal value while benefiting from their financial growth. In conclusion, art investment is a long-term strategy that requires patience, research, and a strong understanding of the market. The best way to approach art investment is with a long-term mindset. Art can provide stability and appreciation over time, particularly when you invest in high-quality pieces with the potential for long-term value growth. Whether you're investing in contemporary art, modern masterpieces, or even emerging artists, the key to success is taking a patient approach and allowing your collection to grow in value over time. Art has historically proven to be a strong long-term asset, and as an investor, you can benefit from the financial rewards that come with holding onto your pieces. If you found this video helpful, be sure to like, subscribe, and share it with anyone interested in art investment. Drop a comment below with any questions or thoughts you have. Let us know how you're approaching art investment for the long haul. Thanks for watching, and we'll see you in the next video.